Hi, welcome back to my channel. Today I want to talk about refinancing. And sometimes you think about refinancing is, oh yeah, we've heard these rates are super low, we've heard this, we've heard that. Today I want to kind of talk about refinancing in a way to keep your payment where it is right now, but use the excess, because a lot of people have equity in their houses. So what to do with that excess equity to really help you out financially. So here's the deal. Like, most households in America right now have a lot of equity in it because of what the housing market is. So great time to be a homeowner, right? With the refinance, you could do a couple different things. You could take it, because chances are, if you haven't refinanced in the last 6 months, you can save a lot of money on your payment. The rates are that low right now. So you could either take your loan and refinance the full amount and pay the old loan off with a new interest rate to be able to lower your payment. Or what some people are doing is they're looking at it as an opportunity with the cheapest money ever to be able to get out of debt. So what they're doing is they're taking the money from they're taking some of their equity that they have in their house, and the loans won't let you take all the equity out. They'll only let you take a certain amount. You have to leave 20% into your house. But if you have quite a bit of equity in there, you could take a portion of that and pay off your bills that you have. So say you're pretty heavy in credit card bills or something like that, you can take you could do what's called a cash out refinance, and you could take and pay off your current loan that you have right now, and then the excess money that you wanted to take out, assuming that you're going to leave 20% in your house, you take that and you pay off other bills with it. So basically, those credit cards that you have at 10, 20%, who knows, credit cards get crazy with their interest rates, right? And it gets to be like a snowball effect, to pay those things down because they're charging so high in interest rates. You can take those, pay them off within your house at the crazy low rates that there are right now. And I can't really say what the rates are online because they change all the time, and there's different variables and factors that go into each person's rate, but they're insane crazy rates that we've never seen before. So you could take that 10-20% credit cards that are killing you right now and put them into your house basically, and just pay everything all together at a really low rate. Some people also like to do home improvements within their house. So like, I've had I just closed this one client, and he lived in kind of an older house. So what we did is we refinanced his house, and we had a cash out refinance to where he took out more than what he owned so that he can take that money and he put it into remodeling of his house. Some people have taken the excess money and put it into a pool into their house. You can do many different things with this. So there's a lot of options, and honestly, these rates, you're like, when you do a loan right now, you're never going to want to redo this loan in the future, because the only reason why we're seeing these crazy low rates that we're seeing right now is because we're in a pandemic. As soon as that's over, and as soon as the economy is recovered, it's going to take a little bit for the economy to recover from this, but as soon as that's over, the rates are going to go back up probably to where they were before, which weren't crazy high, but right now they're so low that it's the cheapest time to get money. So if you need to do anything like pay off your credit cards, take out some excess cash to be able to fix up your house, get your house to where you want it, since we're all spending a lot more time at home now, right? Then feel free to reach out to me. I'm happy to go through all your numbers, let you know how everything looks, what your new payment would be, and to run everything as it pertains to you. One other thing to remember, or a couple other things to remember when you're doing a refinance, you need to have your house for at least 6 months. So like, if you bought your house 6 months ago, and the rates are quite a bit different from where you were when you bought it, you have to wait that long to be able to do the refinance. On an FHA loan or a VA loan, they've passed rules, I think it was about a year and a half ago, where you have to wait 210 days before you can do another loan. So just keep in mind, if it's something that you recently purchased your house and you're looking to get a lower rate, there usually is time limits involved in that. And then also on refinancing, one thing you always want to take a look at is you want to take a look at the fees on that refinance. So when you're doing a refinance, usually the fees are going to be cheaper than when you're buying a house. But sometimes you'll see these crazy low rates that are listed out there, and then you get a fee worksheet and you're like, whoa, why does this cost $20,000 to do this? That's because you're buying down the rate, and sometimes people don't always tell you that. So you always kind of want to look at those fees to make sure that you're doing a no points refinance, meaning that you're only paying the bare minimum cost and not adding any additional origination or loan discount points on there. So when you're doing the refinance and you're looking at that fee worksheet, that's where it's going over your total closing costs. So one thing you're going to kind of want to look at is there's an origination section. And that goes over like if there's any points on your loan, it's going to show there. Usually most lenders will have a processing and underwriting fee, and there's a couple usually like credit report fees and tax service fees. Those are little ones, but they'll have stuff like that, but you want to make sure you're paying no points. And then there's going to be title fees. The good thing about refinancing is there's always an option to shop title companies and to try to get the cheapest one out there to get for title fees and stuff like that. And then you're going to have your taxes and insurance that you're going to start an account over again with. So basically when you do the refinance, you're going to pay a certain amount of insurance and a certain amount of months in taxes, and then if there's an overage in your account, you're going to get a refund from the company that you previously had. So hopefully that wasn't too confusing. I just kind of wanted to briefly go over like the fees for refinance, because nothing really comes for free in that, but it's usually cheaper than what you're going to be getting when you purchase a house. And with these rates, most of the time it's very beneficial to do it, because over the long run you're going to keep this loan for as long as you're in the house, because we're never going to see rates like this again. And if we do, we're going to be in something really bad, so we're going to hope to never see rates like this again. Anyway, if you have any questions for me, if something sparked an interest to you and you want to just go over numbers as it pertains to you individually and see what you can do yourself, I'm going to leave a link below. Feel free to fill out your information, and or just give me a call, whatever is easiest for you. And I hope you have a great day.